So let's take another switch. So you can do many things with gold. Gold is money. So you can do a gold assessment to oil. Now here's a key indicator. I'm giving you a list of recession and crash indicators. Pause this video, write them down, save these charts, analyze them yourself, monitor the reset coming into town yourself with all these key indicators. This is a technical analyst's recession and crash indicators video, and I'm giving you every one I know right now. This is my intellectual property on economics, technically done, vomited up on the screen. Capture it, pause and watch. So what have I done? I've taken an ounce of gold and I'm dividing it by oil. Now the key thing is recessions occur. Gold goes up, oil goes down. The recessionary activity sees reduced economic activity, that sees oil going down. It's a Rockefeller tax. It's a tax on all activity when everyone is spending, and it's how the control structure that is all owned etc. by the oil cartels and the politics that involve oil, etc. across governments. They all skim all that extra froth for themselves when everyone is flush and that liquidity. And guess what? They need to cut it back brutally when no one is spending so that they can stimulate activity, and even still it's not enough. So they do the monetary policy, the QE and everything else. So often commodities move in lockstep. When you have major recessions, the gold goes up in anticipation of fiat proliferation and interest rate cuts, and the oil goes down. So when these are going in inverse directions, to the positive side for gold and the negative side for oil, this is your crash indicator. I've done similar as I did for NOK JPY. I've done a horizontal extremities line in blue between 30 and 14. And you can see the modern era since the 2008 paradigm, which was a shape-shifting moment. And then you can also see the green lines that show the kind of trend. What does the trend show? The trend shows gold going up in value against oil. In other words, people are creeping towards recognizing that this is a ruined economy and they need the hedge and the safety, the insurance policy that gold gives you. So in the run-up, in the lazy days, everything is hunky-dory of 06, 05, etc. Gold was very low in price and oil was relatively strong. In fact, 1 ounce of gold could only buy you 6 barrels of oil. 1 ounce of gold only got you 6 barrels of oil. Can you believe that? 1 ounce of gold, 6 barrels of oil. Then you're at this low point over here, and I've done this for the trend version of this. I've done it like that with a midpoint, showing you that we're roughly at the midpoint right now. You get these nasty little spikes that often have a habit of occurring just as the QE gets announced. Guess what? No one's spending, no one's doing any economic activity, and they're killing currency. What happens? Major spike. So the spiking of this indicator is your recession indicator. People are dead in terms of spending, and the smart money is getting into gold in anticipation of fiat currency devaluation. Then you get snapped back, and then the semi-calm, low, low, low. Remember that 2016 event I said to you that was pretty darn ugly for China? Who was buying whole ton and big importer of oil? China. And where did that demand go? It disappeared. And what did people start doing? Especially the Chinese central bank, the Russian central bank, and all of these. You got a mega spike here. Actually, this outweighs what happened in 2008-09. This gives perspective to what a debt crisis that was, and how, as a commodity buyer of last resort, when China's wheels fell off, leading into 14, this is when the oil price fell. July 14, it broke out of an inverted HVF. Anyone who's ever followed me, at $104, we called it short with overperformance. The oil market, July 14, right there. And it fell, and it even surpassed our own expectation in overperformance, taking out the subprime low and trading in the 20s. During that period, gold was going up, oil was going down. That was your stress in the system. It was huge. What's happened since? We were all hunky-dory and calm along a low here on this increasing value of gold to oil general trend. but we were on the lows of that. That was running up to our 2018 October crash, another key economic event. What did you get? Oil down, gold buying up. You've had a little bit of a pullback, and now we're going there. What do you think's happening next here? Higher up and a super spike to end all super spikes, or coming down? This will tell you your view on the global macroeconomics. If you think the global economy is going to be spending more, buying more cars, more economic activity is going to be spurned. By the way, the non-farm number was atrocious, 75,000 jobs created. Real economic, the Fed wants to cut rates, the yield curve's inverted, all these other things I've shown you. The banks are still collapsing, etc., etc. The Japanese yen is getting ready for a fear spike, etc., etc. You should think carefully about choosing that option. I would suggest probabilities are super spike, gold versus oil, and the gold has already started running and the oil has been limp. By the way, price of oil not moves particularly much up following 2 oil tankers blowing up in the Straits of Hormuz. Even geopolitical events of suspicious nature aren't budging the oil price. You should know there is a problem out there. Houston, we have a problem. Let's change tack. Housing. How about the US housing market? One of the indicators of US housing, lumber. Yes, wow, we're throwing indicators at you. This video is for the committed here. You've got to watch this. You've got to watch, and you've got to be committed, because we're running the rack here. This is for people that really want to understand the game. So what do we have? Well, you have the pre-2008 era and you have the post-2008 era. That is the range for lumber, with the midpoint pre-2000, my apologies, pre the Greenspan, allowing the proliferation. This is way further back. So he said irrational exuberance around about 96 during the dot-com boom. He was in charge since 87, round about there. So it didn't take long for Mr. Low Interest Rates to actually create all forms of housing bubbles and to create a new paradigm for lumber. And why lumber's used in property in the US, most of the houses are wooden, etc., etc. That sounds weird to us, to the Americans. I know that must sound normal, absolutely logical, but for people all over the world, that's how it is. So you've got this new normal of lumber prices, which was more volatile and generally higher, but more volatile. Look at these swings for lumber. Guys go in and out of business like it's going out of fashion. Super spike there, reflation into the October highs. Boom. We'll look at the Case-Shiller property markets, and down she goes. Down she goes. Down she goes hard. Mega slack down. That's a proper shooting star. What do you see come back in the new normal era since the beginning of the 90s, which is, bearing in mind it took Greenspan 3 years to get his feet under the table and do his print fest, and low interest rate environments and largely benign neglect of economic management. And what did you have? Well, here's your 08 dip running into 09. This is your horrific period where houses were just being knocked down, no new ones were being built. This was 2007, and you hit your peak on lumber. This was your warning for property. You could have said it already in 05. Going into 06, it was already coming down. What happened in the 2000s? Pump, big prices in the dot-com, pump, irrational exuberance, chop, 2000s, post the 2000s, your absolute dip low. Reflation, subprime crisis, bigger crash. So the volatility has expanded. So actually we could divide this zone up. Clear it one more time, Francis. Show the guys what you're thinking. There's your kind of pre-Greenspan era. I'll get it out of my mouth eventually. He came in here. Then you have your super spike Greenspan era here, and then actually you have your 2007 2008 period here, where you now have this extremous low and this mega spike high, and you have this obscene volatility. That's how I'd segment that. There's your two stall boxes of price behavior for lumber. How it was in the less aggressive pre-Greenspan world before he got his hands around the throttle, how it became far more volatile and more expensive, and then super volatile and a speculative asset. Where do you think this goes? Back up there, or a little bit of a revisit for a new all-time low down here? Well, we have the Case-Shiller for you. Let's have a look at housing. Now I've got the housing here, and you should think that looks all hunky-dory. Well, what I'm going to do is I'm going to divide it by gold. I'm going to apply gold by troy ounces. So let's have a look at housing in terms of gold ounces. Let's go. Come on, guys. Let's have an enter there, and let's see if you can give me that chart. So that is the housing price at 20 city in the States. Data series. Add gold. Add gold. Come on. Let's try again. We'll get there in the end. No, it's not playing. Okay, so what I wanted to show you was gold. For some reason I've lost functionality here. Essentially this goes like this and dips, and then in gold ounces property is a whole bunch lower. Why? Because during this period gold was continuing to go up in value from its lows. So actually property is already in gold ounces cheaper than it was in 2008. So it's showing the strain. It's already showing the strain. In fiat terms, remember we've proliferated it, it's been reinflated up, and in some areas marginally higher than what before. But that is in destroyed dollar value. What about traders? We're talking about trading. What about us traders? Wow, can you believe us? You've watched for over an hour. I hope this is interesting for you. So here is Charles Schwab. Charles Schwab, good old Charlie, Chucky, and the gang. Now, the traders like a bit of leverage. They like to borrow. Margin lending was getting to all-time highs. Guess what? As they start blowing themselves up, as they start losing money, less commissions, less revenue, and less money made. What do we have here from Charles Schwab? Let's have the pen. So have a look. This is an economic indicator. The traders, how much money they're making, and are the retail stockbrokers making money? Left shoulder, head, right shoulder, neckline, target made. What are we doing here? We're drawing an inverted HVF. Let's close that. Let's take it into the daily. Yep, that's right. We're trading short on Charles Schwab right now. And in fact, we got a better one for you. That's right, a better one. We're expecting more downside on a retail stockbroker. Remember, they went bust. They went bust in .com as well. Let's take a look at Ameritrade. Let's do Ameritrade. Ameritrade has more outages than Schwabi and has also had a kind of topping experience. And what do we have now on Ameritrade? Looks like we could have the first inverted setup in a new trend. Down, look at that trend is down, down, down. We're on the daily. What's happening? If the stockbrokers are making less money, our indicators of overall success in the markets for retail stockbrokers is down. Downward trend, snapback, rally, reactional, nasty sell. Kind of a three top structure there, close to a head and shoulders, not quite. Second convex loop, retreat, retrace, snappy and short, squeezing, squeezing, squeezy, squeezy, Japanesey. Down you go to the downside, target at 39, currently trading 50.52, has been at 55. Big drop. Big drop and overperformance possible. First setup in a new trend. You'll learn all about that on a full program and what it means. So there you go. What about cars? I told you I don't like cars. Cars are going down, down, down. Start with America's favorite, Ford. Yep, Ford. We're whipping you through indices and indicators here, guys, at a rapid rate. I've got so much to cover and we've got to run you through it all. You want to know how to check if the economy is hunky-dory. Guess what? Last time Ford was a hit was way back prior to the 2000 bust. It never recovered from that descending triangle. It bottomed in 2009 a second time after that structure broke down. They snapped back, bought it. It was the only one officially that didn't take state money, although in the end it was forced to take in its funding area. That is a downtrend channel that is heading down. Down, guys, down. Trucks are out of fashion. People, these are big expenditures. Subprime motors, wow, the banks are going to run into trouble. The lending's going to dry up. No more 70 months, 7 years to pay off a car, and you're buying half of it. on a shotgun deal. Are you freaking crazy? When that finance stops, how many people are going to be, oh, I just need to know if I can afford the payment, when they're selling $85,000 trucks? No, you don't. You need to know how much money you're borrowing. That's what you need to know. Way too much for a depreciating asset that is a massive gas guzzler, costs you a fortune, and is not the status symbol it used to be. Okay, downtrend. That's Ford. Let's move on to another car. A company, Fiat Chrysler Automobiles. Now, I think this is the pig of pigs. Let's go daily. So big double top, another setup forming right now on Fiat Chrysler. That's your double top that we would have drawn on a retrospect there. There you go, double, toil and trouble. Down you go, make your target, snap back, rally, squeeze, a little bit of a fall, snap back, squeezing, squeezy. More Japanesey, only not a Japanese car, an American one, dying part the way to its target of 12 from 16. Up top here was 24.5. You're looking at something that's 50% loss. Your Fiat and your Chrysler vehicles down potentially 50%. How'd you like them apples? Then there's my old friend Tesla. We called this one, we spoke about it, we said falling wedge, you're going to break out of a structure over here. You can see that video, so I'm not going to recap it too much. I said when we're at 266 over there, that you would run 180 and you should trade 180. Where did the 180 come from? How did he get to 180? What's he talking about? Go check the whole video. We said it before it happened and we traded it. That was your 180. Key levels of significance. This is an interesting story. Like the Real Vision guys, I'm smelling rodents all over the place. There's a rat in my kitchen. What am I going to do? But guess what? I think it's control structure, and I think it may rally for a bit, may come back up to these levels and come back down. You might get the mother of Head and Shoulders, you might not. But there's certain people behind him that don't want him to fail. It's all behind the totalitarian state of monitoring, surveillance, and tracking. And here's the vanguard for that AI movement, while saying, oh, I don't know if I like this AI. Trying to keep himself on the right side of the masses. Cars, down with cars, short cars, subprime cars, get rid of. Let's talk crypto. Okay, I told you what my trade of the year was, the 2019 trade of the year. I think the Southeast Asian currencies are going to run into a lot of trouble. The Hong Kong dollar, the Korean won. I think the Korean won is going to run into a lot of trouble. So my trade of the decade was the year, who knows, time frame, is the Bitcoin against the Korean won. But I respect that most of you are not in Korea that can sell your local fiat and buy Bitcoin. But you can choose any Southeast Asian or emerging currency. That could mean rands, liras, Mexican pesos. That could mean Eastern European currencies against the Bitcoin. It can even be the dollar and the yen against Bitcoin. Bitcoin will beat them all. In my view, it is in demand, and it's in a new fresh bull market. We were known for calling this not a bottom when everyone else called it a bottom, and that there would be a halvening from the 6k levels down to 3. We had a target of 3.7. It tapped out at 3.2 after running our target, set up the first upside in a trend. We were a bit slow to be on that one on the way back up. This is now against the Korean won. You've got kind of so let's clear this all. You've got kind of lifting shoulder here, then bowling head, and you had a very small dip. I have to drop time frame for you to see that even. It was a very rushed right shoulder. There we go on the blue line. You can just about see it here. And since then we're bullish. That's a bullish candle after a very strong breakout. We may even run that. I'd prefer if it doubled back down and gave us a little squeezy. The volatility gives you that spring to the upside. It also gives you a tight risk for your stop and a mega expansive reward. That's what HVF trading is all about. Get in touch for a course and a program learning to identify those. So Bitcoin USD, let's take you to the big daddy in the chart that most people know, still holding up strong and looking good. It looks like strong for RH2. I think it needs a little bit of a rest back, as I was saying. Needs a little bit of a rest back. There was that bottom that wasn't a bottom. Let's get it back to the daily. I think it needs that little bit of a rest. It would serve it well if it took a small rest just to take a little bit of the sizzle out right now. Down, 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 a little bit of basing out, and again, but maybe in an accelerated. Again, I'm wanting squeezes everywhere. I wanted to go quiet, volatile, low volatility to high volatility expansion. But you might say, oh, that's against the dollar. Let's have a look at it against other currencies. So let's do this whole sweep. We're doing the whole sweep. We'll do whole sweep. If you're an FX trader, you want the yen. You want the rand versus the yen. Not a huge differential in interest rates. You want the Polish zloty against the yen. You want a yen long. If you're an anything trader, you can or crypto trader, you want to be long Bitcoin. You want to be long Bitcoin to fiat, generally all fiats. But if you can substitute it with a weak fiat, you're going to do just dandy, especially a weak fiat that doesn't have higher interest rate. So the euro is a great one. So BTC euro is classic because it actually doesn't cost to substitute euro for dollar in your short. So you can go long BTC USD and short euro USD. You can hedge out your dollar and you can effectively be long a BTC euro. Many of the exchanges do BTC euro, so you can do it. And the euro is just weak, and you saw the Deutsche Bank, and you know what Barclays is looking like. It's a bag of the EU's got to unravel. I don't think it can survive what's coming. They'll try bundle it together. I hope Britain manages to escape. I doubt they will. And that's where I stand on all that. But this is really strong. Nice cupping. This is real bowling out. Nice little parabola. Short little breath of a pullback, and another second. If it can top out there, everyone will go double top, double top. No, it's not a double top. It can be nice continuation. Nice steady climb. Nice continuation. If we get a little bit of a easing, topping and easing, and then a third impulse. And off we go to the races again. Very, very powerful. Going to be potentially in double digits faster than people realize. This is in euros, so the 10,000 euros, quite a key level. It's up top there, and that's what's quite a resistance. So, but certainly in dollars, I can see it coming fairly soon, and not too long after in euros. So we are along the cryptocurrencies. Which ones, you might ask? Well, this is going to be just generally Bitcoin. I do a whole crypto analysis of who should be, and I don't look outside the top 10. And most of them are in the top 5 that we're looking at. Litecoin's been the star. Litecoin's been the star of late. Okay, so let's close the draw tool. Close that and finish running through this. So what about Bitcoin against the strongest? You say the yen is the strongest currency. Does it look bad against the strongest currency? No, it doesn't. There was that downside sell-off. There was the target. It subsequently invalidated that funnel. Now it's now in a bullish state. It looks like all the other charts. In other words, what you're seeing here is Bitcoin DNA. It's far more volatile than the FX. So every chart looks similar. It's Bitcoin you're looking at. You'd get minor variations. There's the pound. You get minor variations in terms of how high it's slung. The pound has been very weak. It's already quite a bit higher than its downward setup. Here's the Mexican peso. Very similar, you know. Here's the Turkish lira. That's been a hell of a currency. That's just been awful. Well, it still looks very similar. Still looks, let's get it into weekly mode, please. Still looks very similar. Slightly different little piece of action there when it was going all crazy. So let's have a look at Bitcoin USD divided by gold. Okay, so our strongest currency is actually gold. Gold is money. So our strongest currency is actually gold. So we have a look at Bitcoin and we divide it by gold, and we still see Bitcoin's dominant DNA, a recovering bull market. Let's change it to the daily because we have less history. Look at that and tell me you would rather be in the gold. I love gold. I want physical. When grid is down, electricity is down, mobile networks are down, you've got to have some gold. I'm not having gold. Don't get me wrong. But in terms of out and out speculation, assuming I have a PC, an internet connection, and I'm able to trade, I am getting long Bitcoin. I am getting long Bitcoin. First prize to make the shekels in the crypto market. I'll do my relative assessment once I'm in there. I might pick up some Litecoin. I might pick up some ABC. I might pick up some EOS. I might pick up some Binance coin. Yes, yes, yes. Bulk of it, 50% holding minimum Bitcoin. Okay, you're not going to go wrong. Okay, so let's have a little look at what else have we got for you? Any charts? Have you ever done so many charts? There's a lot of charts, man. There's a lot of charts. You want to do this properly. Do you want to do this properly? Do you want to do it properly? I want to do it properly. I'm going to show you how you do something properly. It doesn't come easy. You've got to look at charts. Okay, you got to do your relative value of assessment. Again, silver, same story. This is all the Bitcoin chart. Same freaking story. Beautiful little continuation. Down she goes to the bottom. Now, nice rounded bottom. And there she goes. And silver's actually been weaker, and you're already quite a bit higher than these previous levels that were your last major downside, where you had a target performance on your short. We took that on the dollar side. That's it. It doesn't matter which precious metal you look at it. That is the game. Ladies and gentlemen, I have now given you all the cross pairs. If you're an FX trader, you want to be long the JPY, you want to choose a weak emerging. If you want liquidity, yes, you can trade the USD, but better to do the Euro JPY. If you are anything's trader, certainly be long the cryptos. Certainly be along the cryptos against anything. Bitcoin, get a Bitcoin position. If you are equities, be short the automotives and expect a crash to come. But it may pump first. Timing is going to be tricky. They're going to keep the game going for the billionaires and the insider buying. Although the insiders are selling, the lent money that's going against the balance sheet in the business is still going to be going buying. There will come the big short. It's going to be tough to call. Indices grind upwards. They always twist the knife one more time. That'll be a tricky one to short an overall index unless you have real structure and pattern on your side. Individual sectors like cars, down. But be selective. Watch it with Tesla. It can snap back rally. There's silent money supporting that for a bigger game. You saw the two retail stockbrokers. Don't like them, downside. Their clients are not making money, and they don't know how to make money when it's a shorter's market. This is a key point. Nobody knows how to make money in a shorter's market. They don't know how to short. The true trader is one who can sell and make money. The true trader is one that can sell and make money. You need real method and real capability to make money when most things are going down. I've shown you a few things that will be going up. The yen, the cryptos and precious metals, particularly gold. Platinum not yet ready. Platinum not yet ready, but one day ready. Accumulate on the lows, providing you can hold and see through a worsening first before a major re-rating. Okay, that's everything I've done for you guys. There isn't anything more. Short high yield debts if you feel like it. SHYG, HYG, knock JPY. You can trade that one if you think oil's going to be one of the ones that lose. Oil can go down. I never took you past the oil chart. It's enough. It's over an hour and 20. You've stuck with me. You are a freaking legend. You truly want to learn. You are one of the shining stars. You've been given the keys to the kingdom. Go forth and multiply, become wealthy, be awesome. And come to themarketsniper.com if you want to learn more about HVF method and be part of a great community. With that, I love and leave you. Enjoy your weekend. Bye for now, bye for now, bye for now. This is a reset sniper, a market sniper, and a crypto sniper production. Which channel do I put it on? Maybe all of them. Speak to you later. Enjoy yourself.